Hi, this is the Business Guy. For years, Credit Suisse Bank has been providing a safe haven for wealthy American clients to hide assets from the IRS, even after it was caught and prosecuted for doing so, according to former Credit Suisse bankers who spoke with an exclusive interview with CNBC and are working with the U.S. government as whistleblowers. But Senate investigators just reported that Credit Suisse has helped more than 25 American families hide more than $700 million in the bank in recent years. Now, it's fine for U.S. people to have offshore accounts, no problem there. In fact, we help people do it all the time. But you have to report the existence of the account and the profit that it makes to the IRS. When somebody tells us they want to use us to set up an offshore account to evade taxes, they're not going to be a customer of ours. That's what everybody here is instructed to do. And if they're informed that there is a tax evasion motive, they're told to not do business with it. So it's real simple. Set up an offshore account and have your CPA fill out the proper forms. I mean, what's the best way to not get caught for doing something wrong? Don't do something wrong. Then you never have to lose a night of sleep worrying if somebody's going to find out. It's really simple. And by the way, if you appreciate this insight, please click the like button below so YouTube promotes this video. I'd really appreciate it. And subscribe if you haven't already so that when more videos come out like this, you'll be up to date right away. Now, the bank notoriously pleaded guilty in 2014 to criminal charges for knowingly and willfully helping thousands of U.S. clients conceal their offshore assets and income from the IRS. In fact, it admitted at the time that it used sham entities, destroyed account records, and hand-delivered cash to American clients to avert the IRS detection, agreeing to crack down on U.S. tax dodgers going forward as part of the plea deal. Now, Credit Suisse also agreed at the time to a host of reforms, including disclosing its cross-border activities and cooperating with authorities when they were requesting information, among other things. Now, the troubled bank appears to have violated that agreement, according to a new report by the Senate Finance Committee that details ongoing and rampant abuse since then. The report released Wednesday details the findings of the panel's 2-year investigation and takes on more urgency given the looming banking crisis. Now, the Swiss National Bank, the country's central bank, injected more than $100 billion of liquidity into Credit Suisse to keep it afloat earlier this month, while the Swiss government agreed to provide UBS with some $9 billion to backstop losses resulting from the takeover. Still ongoing, Senate investigators say the new revelations raise the question about how much money remains hidden inside the vaults of the bank whose collapse rattled the foundations of the global banking system. The Senate report, which was prepared by the panel's Democratic staff, accuses the bank of violating the terms of the 2014 plea agreement, which could trigger a host of repercussions if the Justice Department presses the case. Now, it's unclear how much potential liability U.S. is exposed to as a result of the report, but a lawyer for the whistleblowers argue the bank could pay as much as $1.3 billion. Goodness gracious, that's all they need. Senate's Finance Committee Chairman Ron Wyden, a Democrat of Oregon, said his committee had received new information just this week from Credit Suisse about additional American undisclosed accounts that the bank held after 2014. Quote, it is still going on as of just the last couple of days. Even more money has been found to have been concealed, and there are very substantial issues here, Wyden said. Clearly, it's time to prosecute and ensure that there are penalties that send a strong message. Now, Credit Suisse employees aided and abetted a major criminal tax evasion scheme, a Finance Committee aide said, asking not to be named because the report had not been released yet. To date, no Credit Suisse employees involved in the scheme have faced any consequences from the United States government for their participation. Hiding fortunes. Senate investigators say they discovered that Credit Suisse enabled as many as 25 American families to hide fortunes, like we said in the beginning, totaling more than $700 million in the bank in the years after Credit Suisse's plea agreement. They thought they could get away with it, and they largely did, the aide said. It's not a question of whether Swiss banks continue to do this. It's a question of which Swiss banks still do this. In fact, when I walked down the streets of Bahnhofstrasse in Zurich, Switzerland myself several years ago, I'd go in to see several banks. They'd put me in a room, close the door, a guy in a suit walks in, and the first words out of his mouth was, "Are these accounts going to be reported or unreported?" In other words, was I planning on reporting these accounts to the IRS or not? And actually, I said reported. After all, I don't want to be in hot water. I'm in the business, so I have to do things right. But to their credit, if I said not reported, they may have said, sorry, we can't do business with you. So I got to give them credit there. But that's a big issue. I mean, people are supposed to pay their taxes, and I don't want to get caught in any snare of somebody trying to do tax evasion if we are working with them. So we try to avoid that kind of business as much as we can. Now, in a statement to CNBC, a Credit Suisse spokeswoman said said it does not tolerate tax evasion. In its core, the report describes legacy issues from a decade ago. We have implemented extensive enhancements since then to root out the individuals who seek to conceal assets from tax authorities, the spokeswoman said, asking not to be identified because she was not authorized to speak on the record. She said the bank's new leadership team has been cooperating with the committee, and Credit Suisse has supported the work of Senator Wyden, including in respect to suggesting policy solutions to help strengthen the financial industry's ability to detect undisclosed U.S. persons. She said the bank's policy requires it to close undeclared accounts when they're identified and discipline employees who don't follow the policy. Now, that kind of reminds me of what happened to Wells Fargo. You had these people that were paid to help people open up accounts. They got paid extra money for the number of accounts they opened. So what happened is a lot of the Wells Fargo employees were opening accounts secretly without the customer's permission in order to get these payments. And yet, it's very likely that the CEO of the company didn't necessarily know this was going on. And once he found out, he didn't stop it quickly enough either. But that's the key issue here. Some employees go rogue because they get extra money for doing certain things. And if they're doing things illegally, the people at the top may not exactly know what's going on. But once they find out, they need to stop it right away, of course. The two former Credit Suisse employees who worked as whistleblowers in the U.S. government and Senate investigators told CNBC some of the bad behavior continued long after the Credit Suisse 2014 plea agreement, and CNBC agreed to mask their identities on camera and to maintain their anonymity because they say they fear retaliation from the bank. And they were interviewed in the week before Credit Suisse collapsed earlier this month. Although the bank did not disclose and close any American accounts after its 2014 plea agreement, some bankers worked with high net worth clients to keep certain Americans at the bank, and by changing nationalities listed in their accounts and ignoring evidence that the account holders were Americans. In other cases, they helped American clients move money to other banks without reporting those transfers to the U.S. authorities, the whistleblowers say. Tremendous pressure. The report and interviews offer a rare look at the inner workings of the secretive Swiss banking, a world rarely penetrated by outsiders, and they show how compliance systems inside Credit Suisse broke down in the years before its collapse this month and the rescue by the Swiss government and the rival bank UBS. Bankers are under constant pressure, whistleblowers say, to keep bringing in deposits to the bank. You're under tremendous pressure to bring in these net new assets, which ultimately translate into revenue. The first whistleblower said in describing a culture where the bankers were expected to keep the assets of the wealthy clients inside the bank, even if they had to cheat to do it. And that's the reason for the fraud. You don't want to lose those assets. And what you do is you try to maintain them in any way, shape, or form. Senior executives would call out individual bankers at quarterly meetings where they would read the asset number for each banker. If a banker's number declined, the second whistleblower said, you'd get exposed in front of your colleagues. And as a result, he said, there were many moments where people were simply omitting saying things. Don't ask, don't tell is maybe a good explanation of what happened, he said. Now, they would have clients that are Americans, but they would switch their passports around and show a flag as if they're not. So Credit Suisse bankers, for instance, repeatedly flew to Miami to meet with American clients and yet failed to flag them as U.S. citizens, Senate investigators said. Secrecy drives the entire Swiss banking industry, the first whistleblower said, to a point that this sector may not be able to survive without it. Swiss banks are much more expensive, and there's a reason for that, he said. If you could choose anywhere in the world you want to be, why would you want to pay more? Why would you be in a place which underperforms in terms of return on assets? If a client isn't hiding assets in Switzerland, the first whistleblower said, there's no other reason to be there, he said. Well, I disagree with that. I think that there is a reason to be in Switzerland because of the safe, strong banks, security, and making sure that your money is safe in the proper banks, that is. But even Credit Suisse, which had their problems, was rescued immediately by the Swiss government because their banking sector is so important to them, they really have to keep it strong and robust. Congratulations. Emails obtained by the Senate Finance Committee show just how far the bankers went to keep the identity secret and to ensure wealthy Americans were able to switch nationalities, at least from the bank's internal record keeping. In one email, one of the Credit Suisse bankers writes to another bank employee, quote, please don't write or document these topics, end quote. One American client, an heir to a $200 million fortune, deposited at Credit Suisse emailed to say they renounced their U.S. citizenship. Quote, I tried to reach you. Congratulations. Their private banker emailed back, this is a big step for you, and I know it was not easy. Now, the heir to the fortune replied, thanks. Hopefully, this should also make Credit Suisse now more relaxed. The heir closed the message with a smiley face. The family. The committee's investigation uncovered major violations of Credit Suisse's plea agreements, including an ongoing, potentially criminal tax conspiracy involving nearly $100 million in undeclared offshore accounts belonging to a family of dual U.S. Latin American citizens. And that's the thing. If you're a U.S. citizen, you have to pay tax on worldwide income. It doesn't matter if you have additional citizenship. In addition to the U.S. citizenship, you still have to pay taxes back in the U.S., even if you're a citizen of another country. The aide said that Credit Suisse closed accounts held by a family worth nearly $100 million in 2013 and moved the funds to other banks in Switzerland and elsewhere, but did not inform the U.S. tax authorities about the transfer of assets until 2021, which was months after whistleblowers informed the U.S. authorities of the existence of these accounts. In the Senate report, the clients are not named, but simply referred to as the family. While it's legal for Americans to hold funds in foreign bank accounts, they must file forms with the IRS disclosing the assets and pay taxes on any relevant gains. It's simple. Americans must file a disclosure document called a Report of Foreign Bank and Financial Accounts, which is referred to in the industry as FBAR. So that's an FBAR form. The committee said the family held assets at Credit Suisse dating as far back as 1979, and they found evidence Credit Suisse bankers visited members in the family in Miami as early as 2000. Holding meetings at the Mandarin Oriental Hotel and enjoying meals at the Capital Grill restaurant in Miami's fashionable Brickell neighborhood overlooking Biscayne Bay. But aides say they didn't find any evidence the family ever filed the required paperwork with the U.S. government or paid taxes on their assets. Instead, the assets were held under one family member's dual Latin American passport. Legal jeopardy. As a result, the aide said, they're potentially in legal jeopardy, to put it mildly. Committee aide said the family's assets were overseen by a high-level Credit Suisse executive in its Latin American division, and that official participated in the meeting in Miami. That's notable, aide said, because the same official was the supervisor of several other Credit Suisse bankers who were previously indicted in connection with the 2014 American offshore accounts. Committee aides complained that Credit Suisse declined to provide the names of any of the employees involved in the Swiss banks that received the funds, but they were able to determine the information through other sources. The Miami case is not small potatoes, the Senate aide said. If proven, it would be one of the largest FBAR violations in United States history. Former Justice Department prosecutor Jeffrey Nyman, who is representing the whistleblowers, said he believes fraud is still ongoing and the DOJ should claw back hundreds of millions of dollars in fines that the bank agreed to pay in 2014, but ultimately didn't have to pay. The bank agreed to pay $2.6 billion, but a federal judge only imposed a penalty of $1.3 billion at the time. I think Credit Suisse is aware of Americans who are hiding money today, and I think the bank is doing whatever it can to contain wherever the damage is, Neiman said. $1.3 billion at a minimum. The U.S. government needs to collect that $1.3 billion for the American taxpayers. This bank needs to be made an example of, he said. We hear tough talk out of the Justice Department about holding repeat corporate offenders accountable. Let's see if the words have actual meaning, end quote. The whistleblowers stand to gain financially if there are further payments to the U.S. government. Under the law, whistleblowers stand to collect between 15% and 30% of any money recovered by the U.S. government as a direct result of information they provide. Now, the Senate Finance Committee doesn't think the U.S. prosecutors have gone far enough in holding Credit Suisse accountable, and that's according to what the aide said. The report is part of a campaign set up to pressure the DOJ to crack down on the Swiss bank and the recent takeover of the bank, and it puts it squarely in the spotlight. The DOJ must correct the tax oversight of Credit Suisse and hold Credit Suisse accountable for any violations of the plea, he said. The aide also cited recent indications of a white-collar crackdown. Quote, DOJ said, we will go after anybody at banks who commits tax evasion, end quote, the aide said. Quote, then do it. We're going to drop you 12 names in this report. Go after them, end quote. However, the Justice Department declined to comment when contacted for this story. Never say never. It's not clear what liability, if any, UBS assumed for all this as a result of its emergency government brokered takeover of Credit Suisse on March 19th. It's also not clear how much of this potential legal overhang was disclosed closed to UBS before its acquisition of Credit Suisse, although a source familiar with Credit Suisse's thinking said UBS officials are aware of the situation. Officials at UBS did not respond for a request for comment for this story. A person familiar with Credit Suisse's thinking told CNBC that it is disqualifying for the Senate Finance Committee to release its report even as global regulators are trying to shore up the global banking system by facilitating the sale of Credit Suisse to UBS. The financial services sector and its importance to the world economy has become blatantly obvious to everybody, the person said. When asked if he could say for certain that there are no undeclared American dollars in the bank today, the person said, quote, "I don't believe there is anything that could be described in this way. Now you can never say never," end quote. He said Credit Suisse has investigated and not found any more illicit accounts. I don't believe there's anything there. So there you have it. That's what's going on. Credit Suisse was apparently continuing to help U.S. people evade taxes, something we do our best to steer clear of. We turn down that kind of business. It's perfectly fine to set up an offshore account. Just do it legally. Report it. I mean, goodness gracious. Somebody has to pay for the radar. So I hope you enjoyed this report I got from CNBC. Please like, subscribe, share this video, and we'll see you next time. This is The Business Guy.